So Walmart fell almost 10% today. And before we go any further, full disclosure, we don't own Walmart. No position, no bet in either direction. We're just going to read the page together because today is a really good lesson. Because here's the strange part. The quarter was genuinely good. Revenue came in at about $188 billion, up almost 6%. Online sales grew 23%. Earnings beat expectations. And it gets stranger. They didn't just beat. They raised their forecast for the whole year. More sales and more profit than they'd promised before. That's the filing from this morning. So a good quarter, a raised outlook, and the stock dropped 10%. What's going on? Well, the answer was sitting on the page before the news even came out. Look at the price tag. People were paying about $36 for every $1 a year of Walmart's profit. Similar stores usually go for about $21. That's a premium price, a big one. And that's exactly what our buy zone said. Premium quality, which means a genuinely great business at a price well above what people normally pay for it. Both halves of that sentence matter today. Because when a stock is priced for perfect, a good quarter isn't enough. The business didn't change today. Same customers, same stores, same earnings, honestly slightly better. What changed is what people are willing to pay for it. That's the whole move. And just to be clear, it isn't a business problem. Look at the health row. Operations scoring 7 out of 9 and strong. Bankruptcy risk safe. Earnings quality clean. Nothing here broke today. So here's the lesson worth keeping. A stock can fall on good news because a stock price isn't a grade for the quarter. It's a bet about the future. And today, the market decided that bet had gotten ahead of itself. Knowing what you're paying before the news arrives is the part you can actually control. Visit us at smartcharts.co, where we explain the stock market in plain English for people who were never given the manual. Nothing here is financial advice.